Did you know that you might be sitting on tens of thousands of dollars, if not hundreds of thousands of dollars, that you could use to buy your next flip, to buy your next rental property, and fund your real estate deals? It's called a HELOC, or home equity line of credit. And in this video, I'm going to break down what they are, how you can get them, how you can use them, and best practices for you to use something that's sitting at your fingertips to create wealth. My name is Sam, and I've been able to buy $50 million worth of real estate without using any of my own money, using multiple strategies, including HELOCs. By the end of this video, you'll know exactly what a HELOC is and how you can use it to supercharge your wealth. In simplest terms, a HELOC is a revolving line of credit that allows you to borrow against the equity in your home. Over the past 5 years, the median home price in America has gone from $313,000 to $420,000. So a 34% increase in home values means, whether you know it or not, if you've owned a house for at least that long, you're probably sitting on hundreds of thousands of dollars worth of equity. And that equity is simply the difference in what you owe on your house versus what your house is worth. You can tap into that to create wealth. So for a simple example, if your house is worth $400,000 and you owe $200,000, you have $200,000 of equity that you can tap into. Typically, you're able to get 70 to 90% of the equity that you can use now. It works like a revolving line of credit or credit card. When you borrow against it, you pay interest on it, but when you're not borrowing against it, you don't have to pay a dime. And your interest rates are typically lower than other forms of borrowing because it's backed by your home. Typically, when you borrow money against your equity, you're able to take 5 to 10 years to pay it back, so you can utilize it for something like real estate investing, but there's no huge rush to pay the principal back. You will have to pay a little bit of interest throughout that. However, the principal balance can be pushed down the road. Let's talk now about how to get a HELOC. Then I'm going to talk about how you can use it as a real estate investor to be extra dangerous. You typically need to have a decent credit score of about 650 or higher and have to have at least 20% equity in your home. You also have to demonstrate the fact that you're able to make repayments on your personal mortgage already. So you have to have a good payment history and you have to have some equity in your home. There are a lot of different types of lenders that will give you a HELOC on your home, everywhere from whoever actually has the mortgage on your property to other small local banks to credit unions. A lot of lending sources are happy to take out HELOCs because they understand the value and the security of having it backed by your personal residence real estate. Now, before you get too worried about the risk, just understand that you're only borrowing the money when you're using it for an actual real estate deal. You're going to go to one of these lending institutions and they're going to appraise your property and they're going to give you an actual active value of your property. They're going to see your mortgage and then they're going to give you a loan on that equity, as I mentioned earlier. However, you're not being charged interest. There's no risk involved unless you're pulling that money out to actually use it on a real estate investment. We're going to get into how to do that and what types of real estate investments you should be doing that with here in a minute. But just know it sounds kind of risky, but it's really not. If you're going to get into real estate investing or you are in real estate investing, you're borrowing money from a private lender or a hard money lender or another bank. It's a similar amount of risk, if not less risky, in my opinion, because we're talking about your personal residence and you're only borrowing it when you need it. Not all HELOCs are created equal, so make sure to get a few different bids from some of these lending institutions and ask questions about fees, draw periods, and specifics on the repayment periods. Once you do that, it should take about 2 to 4 weeks and you will have money available to borrow. Let's talk about different ways that you can use a HELOC as a real estate investor. So let's just assume here that you have that $400,000 house and you have that $200,000 mortgage. So you have $200,000 worth of equity. Let's say you get a HELOC for 80% of that, which is $160,000. All right, let's use a conservative example. Let's say of that house that's worth $400,000 and you owe $200,000. Let's take the $400,000 times 80%, which is $320,000, minus your $200,000 mortgage that you have on the property. That gives you $120,000 to play with a very safe equity position for you and the bank. So now that you have that $120,000, you pull it out and it is yours as cash to use. You can use that as a down payment on a rental property. You can use that as a down payment on a hard money loan, because most hard money lending companies are going to require some type of down payment or some type of liquidity. You can use that as rehab funds. Let's say you borrow from a private money lender for the purchase, and you can tap into that $120,000 and use that for the rehab funds, because if you are flipping it, you will get all of that back plus interest, and the rest of the profit is yours. If you're keeping it as a rental, you'll be doing a refinance and pulling all of that money out. You have a long time to pay the HELOC back. Just remember that you are going to be charged interest only until it's paid back, and you don't have forever to pay back the principal. No matter what type of real estate strategy you're using it for, just make sure you have a plan to get the principal and interest paid back at some point in the near future. I would say a couple years or less. And while you're waiting to pay it back, make sure you have some type of way to pay that interest only. Basically, HELOC can be looked at as a down payment or gap funding that allows you to utilize other funding sources. Now, you may have enough equity in a big enough HELOC where you can do full purchases. If you're able to buy a house for, let's say, $80,000 and put $30,000 into it, that $120,000 we talked about in your HELOC will be enough to purchase and fund the entire project, which would be incredible. Some people may have that luxury, some may not. However, having access to capital that you have control over will be an absolute game changer and just give you more flexible options to do more things and to plug the gap of other lending sources that I mentioned earlier, like hard money or private money. So there's a ton of positives. Now, of course, like anything else, there are some risks that you need to be aware of. You are using your home as collateral, so if you don't make payments for a long enough period of time, there definitely are some foreclosable options that the bank may have. So again, make sure you have a place for the money and a plan to repay it quickly, at minimum the interest only. HELOC rates can fluctuate. They fluctuate with the market. They're cheaper than other types of borrowing interest. However, they do tend to fluctuate with the market. So make sure you keep an eye on that. You should know the rate at your borrowing from when you borrow, but just make sure you know that and account for that when you're running your numbers. And make sure to not over leverage yourself and put yourself in a situation where it's too tight to make payments for your personal life, for your business life, and you're throwing your home into the mix. So just make sure not to over leverage, but that can be said for any type of investing. I'm not trying to scare you here, because working your normal 9-to-5 job and just being a number on a spreadsheet, and if something goes south in your company, thinking that your boss isn't going to make you the scapegoat over them, or if something happens to you, they're not going to replace your job the next day, is a silly thought process as well. Real estate is risky, but in my opinion, it gives you the most control and is the least risky option if you're willing to invest and do things the right way. Having a HELOC is one of the most flexible and affordable ways to get some extra money as a real estate investor, so that you're able to use little to none of your own money out of your personal checking or personal savings account. Again, that $50 million worth of real estate I've been able to buy is using none of my own money, because I'm willing to look at strategies like this: private lending, hard money lending, credit unions, small local banks. A mixture of all of these types of funding sources done the right way will allow you to buy real estate and own an asset that will create wealth for you using as little to none of your own personal piggy bank money as possible. Check out the links in the description for some more free training and more free resources. Make sure to subscribe to this channel and hit that like button for more videos like this, where I'm just here to educate you and not asking for anything. See you on the next one.